we've talked again on earlier episodes of the show about the importance of setting a savings goal for a big project like a down payment for a home. How do you know what the number is? Like, when have you saved enough that you're ready? Obviously, it'll depend somewhat, but are there any things to look for?
Well, I think looking at budgeting for what you can afford on a monthly basis is part of the equation. The other main part that you often hear, especially from a young first-time buyers, is I can afford the monthly mortgage. I just don't have the down payment. So saving up that 20% of the fair market value, or, the value of the house. I use that. It's sort of a rule of thumb, but it also has financial implications, which we'll talk about later as far as the getting a mortgage for your home. But until you get to a place where you can put down 20%, for most people, I would say, that's a good goal to feel like you're ready. I would also say you want to have a little money left over for things like maintenance, buying your furniture. Obviously, closing costs are part of the initial purchase. If you had $100,000 and you were buying a $500,000 house, you're not going to have enough to buy a couch or even close on the property. You probably want to have a little bit more saved up than just the 20%.
Right. So it's not even just the 20% and the monthly mortgage, but you'll need a bigger cushion than that, sounds like.
Yeah, absolutely. Because once you own the home, as most people end up using a mortgage to purchase their home. If you don't pay your mortgage, eventually the bank will foreclose on you and take your home back. So if you have no cushion, if you bought a home and you're living check to check after you buy the home and then you lose your job for 8 months, you will also potentially lose your home. So you want to have more cushion than just the 20% equity in your home.